name is Izati, and I will explain regarding the causes of Asian financial crisis.
Hello, I'm Yazim. I will explain to you guys about the Malaysian response to the Asian financial crisis.
Hi, my name is Fatina Shamira Natasha binti Shafa Bahri, and I want to present to you all aftermath of the financial crisis.
Hello,
Stay tuned.
I'm Hazrin Aiman. I will explain to you about the path to economic recovery.
My name is Amira Balkis, and I will explain to you about challenges in future and summary.
Hi, I will explain the causes of the Asian financial crisis. Excessive investment financed by excessive external saving. According to economists, both conditions provide condition which is economic disequilibrium. Excessive investment raised the inflation rate, while excessive saving produced bubble in the economy resulting in unemployment. Asian economies grew on behalf of external saving, which included inflow of foreign capitals and loans. For example, money for direct foreign investment will result in increase in production of goods and services, but large portion was used for indirect investment in capital and real estate market. The Asian economies exceptionally had high rates of saving, more than 30%. They did not require foreign savings and borrowings, and eventually it will decrease in return on investment and created wasteful investment in certain sectors in economy. Next, international investors with huge amount of foreign funds penetrated stock markets in region. Once stock prices rose to unsustainable high level, the speculators immediately withdrew all their capital from the market, causing the stock market to collapse. The collapse in currencies markets make foreign investors panic, and the inability of borrowers to repay the foreign loans made the banking sector highly vulnerable to disaster. The banking sector's inability to borrow cheaper from foreign capital markets will resulting in rising interest rates, disruption of normal financial intermediation process, and contraction of credit.
Hello guys, my name is Hazin, and I will explain to you guys about the Malaysia's response to the Asian financial crisis. Hope you enjoy! It all started when Malaysia experienced currency depreciation of 35% and fall in equity prices of 38%. Monetary policy response. When the ringgit Malaysia remained volatile, Bank Negara Malaysia raised interest rate from 7.6% to 8.7%. It is to stabilize the panic in the financial market, and the other quantitative restriction is as follows. Fiscal policy response. Tax incentive is given based on the increase in the value of export. Import duties were imposed on imported consumption goods. Contribution rate to EPF was increased from 5% to 7%. Corporate tax rate was reduced from 30% to 28%, and the construction of mega projects were deferred. Capital control. It happened on 1st September 1998. The ringgit exchange rate was fixed at 3.8 to the US dollar. The capital control is related to the stabilization of both the currency and stock markets. For the stock markets, only portfolio flow will be affected. And lastly, the central bank regained some monetary autonomy. Dana Harta, Dana Modal and the Corporate Debt Restructuring Committee, the government implemented a financial structuring program. Dana Harta was formed to remove non-performing loans from bank balance sheet. The banking sector with gross non-performing loan of above 10% had to sell bad loans. Most NPL were bought at the rate reflecting market rates. Dana Modal was formed to recapitalize the low equity banks. Dana Modal, a wholly owned subsidiary of Bank Negara Malaysia, had two tasks, which are capital injection into the failing banks and the consolidation of the banking sector. Corporate Debt Restructuring Committee, or known as CDRC, was formed to allow voluntary workout of corporate debt between the creditors and shareholders. The CDRC accepted application from the corporate sector requiring immediate attention to resolve restructuring problems, usually from small and medium-sized firms, especially Bumiputra entrepreneurs.
Hello, good morning. I'm Fatin Shamira Natasha binti Syaful Bahri, and I'm doing the report on the aftermath of crisis. Firstly, the Southeast Asian country experienced an economic shock of unprecedented of severity, which is after decades of uninterrupted high growth. Based on the research, as we can see in the Thailand, the economic growth rate fell from 6% in 1996 to almost zero in 1997. Meanwhile, in the Hong Kong, Malaysia, and South Korea contracted between 5% and 8%. Moreover, the extent of the market overreactions was striking in terms of the degree to which the currency had depreciated and stock market fell. The IMF provided significant sum of money to stabilize the countries of Indonesia, Thailand, and South Korea in order to sail through the troubled times. Next, Malaysia imposed capital controls in 1998 that largely aimed the offshore ringgit Malaysia market in Singapore and the short-term portfolio flows. The authority was believed that the offshore market to constrain their ability to bring down the interest rate quickly. It took the form of the requirements, which is to bring the ringgit onshore by end of September, and the one-year holding period for repatriations of the portfolio capital inflows. Then, the controls were replaced in February 1999 with the system of graduated exit levies, and it became relaxed after that.
The forceful and stronger structural reforms were part of these programs, which the government required to supervise closely the weak institutions and decrease the government development expenditure.
Hello, I'm Hazrul Aiman. I will explain to you about the path to economic recovery. Before this, the currency crisis began because of the weakness in the financial system, so it will affect the stock market, economic, and the financial sector. Domestic factor and defect and loopholes in the international financial system, lack of effective surveillance mechanisms, and lack of transparency are the factors for the currency crisis to happen. The first steps in economic recovery is implement capital control measures such as impose new monetary, fiscal policy, and bank restructuring policies to address the major economic stability challenges and promote stability to the Malaysian economy. Next, Malaysia also has focused on maintaining the political stability and limit foreign participation to area damage with its overall liberalisation targets. Malaysia also has focused on open-mindedness and transparency culture. I will explain to you about the steps taken by the government in terms of the monetary policy. Firstly, Malaysia also has focused on foreign capital inflow, enjoys strong export performance, and currency exchange rate volatility has stabilized. Next, Malaysia also promote open and export-driven economy. Furthermore, Malaysia also have implemented the plotted exchange rate meanwhile initiated reform and restructuring measures. Next, I will explain to you about the steps taken by the government in terms of the fiscal policy. Firstly, in this aspect, Important recovery indicator is the consumer aggregate demand. For example, increased sales of the consumer durable such as vehicles, houses, and higher collection of the sales tax. Lastly, in the aspect of the bank restructuring policy. Firstly, Malaysia has established a central agency, National Economic Action Council, to formulate, implement and monitor the measure to revive the economy. 3 institutions were established to restructure and reform the financial and corporate sector. Firstly, Dana Harta, to purchase non-performing loans and asset management. Next, Dana Modal, recapitalize financial institutions. For the Corporate Debt Restructuring Committee, is to assist corporate structure restructuring. Next, the other step taken by the government is merge of the banking or the financial institutions, and Malaysia also has consolidated the stockbroking industry to create strong, efficient and competitive stockbroking companies. So the result and findings after the Malaysian has taken several steps is Malaysian economy started to grow in second quarter 1999 by the 4.1% and the third quarter growth of the 8.1%. So it's the end of the recession. So economic recovered and a growth rate in the 4% to 5% spurred by the fiscal measure.
Challenges in future. High and growing corporate debt and credit in China pose threats to regional growth if they are not successfully managed. Japan's macroeconomic policy is fully extended, leaving little capacity to respond to new shocks, while geopolitical risks, including on the Korean Peninsula, could have economic reverberations. The strengthening US economy is obviously positive for the region. However, as monetary policy normalizes, financial conditions could tighten as markets overreact or in response to badly timed fiscal stimulus or protectionist policies. In the background, rising volumes and volatility in capital flows are seen as key risks to the region. The common risk facing the region means that we need good global risk-sharing arrangements. The IMF needs to continue to improve its reputation as a trusted partner, so it is an early rather than last resort. Summary. The term financial crisis refers to currency crisis, stock market crisis and banking crisis. The Asian financial crisis broke out in Thailand on 2nd July 1997 and swept through the region, affecting Malaysia and its neighbouring countries. High economic performance, low inflation and private sector improvements provided Asia's fast-growing economy with the capacity to borrow internationally, but short-term flows were used to finance long-term investment projects, thus creating maturity mismatch. Foreign direct investment, bank lending, capital market activities also accelerated the Asian crisis. There was a lack of transparency and poor corporate governance in the companies, which led to defaults and bankruptcies. The Malaysian government responded to the crisis by implementing capital controls and imposing new monetary, fiscal and bank restructuring policies.